Welcome back to Alpha Recap. Glad you tuned in. Markets closed up today, and we've got a lot to unpack from a pretty risk-on session. As always, if you have questions, you can reach us at stockalpha.ai.
Nice to be here. So, what really stands out here is that this was one of those days where leadership was obvious. Tech led, but it wasn't a one-trick pony.
Right. The headline numbers were solid. The S&P 500 exchange-traded fund finished up about 1.2%. The NASDAQ 100 exchange-traded fund was up about 1.8%, and the small-cap Russell exchange-traded fund rose about 1.4%. That mix, big tech strength with small-cap participation, is meaningful because breadth was constructive rather than narrow.
I mean, when you step back and look at this, it felt like traders were rewarding concrete company news, not just momentum. A handful of big stories pushed sectors.
Yeah, the market didn't move on some single macro surprise today. It was an accumulation of headlines. A guidance lift from Johnson & Johnson for 2026, stronger profits at Wells Fargo driven by interest in trading, and Amazon announcing plans to buy Globalstar.
Right. And the other thing is those are very different catalysts. Corporate guidance, bank operating beats, and M&A. So different pockets of the market had real reasons to move.
Exactly. Guidance upgrades are rare, and they tend to stick. When Johnson & Johnson raised its outlook, healthcare and defensive names got a bid because that's a durable signal.
And Wells Fargo's beat mattered for financials more broadly. Higher interest income and trading revenue stories make bank earnings look more resilient in a higher rate world, at least in the near term.
So tech led the day. The NASDAQ 100 outperformance pushed headline returns. But utilities, materials, industrials, and even real estate had their moments.
Yeah, that tracks.
Let's walk sectors quickly so listeners get a feel for who helped and why.
Go on.
Technology and communication services were the engines, especially software and big cap names. Oracle and other enterprise software stories got attention around cloud transitions and recurring revenue momentum. Financials showed pockets of strength. Not a uniform rally, but banks that reported better trading or net interest income like Wells Fargo. And by the look of it, big names like JP Morgan saw buying.
So yeah, that tracks.
Utilities were interesting, typically defensive, but they advanced on storage and solar stories, and some policy-related headlines. That reflected both yield flows and stock-specific news.
Industrials and materials also picked up steam on automation and supply chain narratives. Those cyclical themes got some oxygen, which helped breadth.
Real estate showed positive deal flow and refinancing momentum, which helped certain REITs. Energy was mixed but tilted positive as renewables and supply alerts nudged names higher.
Cannabis was all over the place. Mixed policy signals left those names volatile. Headlines drove action more than fundamentals.
Not a great day if you were looking for clarity in that group.
Short reaction.
Short reaction.
Let's dive into why this mattered for the market structure. Breadth, flows, and the Fed backdrop.
Good point. The combination of tech leadership and small cap gains suggested a healthier rally pattern. When big tech outperforms the S&P materially, it can drive momentum strategies that amplify gains. But that concentration risk can also create fragility if tech gets hit.
Right, and the Fed backdrop was the silent co-star. There wasn't a dramatic shift in policy expectations today. Inflation data has been mixed recently, so traders kept pricing steady for the moment.
Analysts were noting that yields had retraced some highs, which made investors more willing to buy growth on good corporate news. But everything was still conditional on upcoming inflation prints and Fed speeches.
I mean, when you step back and look at this, if CPI or personal consumption expenditures surprise to the upside, that narrative changes quickly.
Exactly. So today's rally was constructive, but not unconcerned. Traders rewarded earnings certainty and strategic M&A while watching the macro calendar.
We should highlight some individual movers so listeners get color on the names that drew attention.
Johnson & Johnson raised guidance for 2026. That was a clean catalyst that helped healthcare. Amazon's plan to acquire Globalstar fed M&A optimism in tech and communications infrastructure.
Wells Fargo reported profit gains from higher interest and trading income, which boosted bank narratives. JP Morgan and Oracle were also cited among the day's movers.
There were niche winners too. Mueller Water Products and similar industrial plays got analyst attention, and thematic coverage around Nike and dividend narratives stirred interest among value managers. Also, smaller names saw idiosyncratic moves after regulatory filings and notices.
Honestly, I was a bit surprised by this one.
Which one?
The Nike dividend chatter. It's not every day a big consumer name pops because of a Dogs of the Dow style piece.
Yeah, that was a fun thematic angle. Not a market mover on its own, but it drew attention from dividend and value managers.
Quick note on crypto-linked names. Adoption headlines and a bounce in crypto prices helped those equities and ETFs. Those moves were pretty idiosyncratic, but they fed risk-on flows into growthier pockets.
Let's translate some of the technical context into plain language. When breadth improves, meaning more stocks are advancing across sizes and sectors, it increases the chance that a rally can continue. If only a few large names are propping up indices, that's more fragile.
And momentum strategies can accelerate moves. So when the Nasdaq 100 outpaces the S&P noticeably, it can attract trend-following capital, making gains larger, but potentially quicker to reverse if sentiment shifts.
Volume, put-call ratios, and sector rotation were flagged as things to watch. If volume is light and the rally is narrow, that's less convincing. But today's session had participation. That matters.
Right.
So, quick 3-point recap before we get to what to watch next. 1. It was a risk-on day with tech leading, but broad participation. 2. Corporate headlines, guidance, beats, and M&A were the immediate catalysts. And 3. The Fed and upcoming inflation data remain the big conditional factors.
What should listeners watch tomorrow and in the coming days?
Watch the macro calendar. CPI, retail sales, or any employment-adjacent prints that are scheduled. Fed speeches and regional Fed commentary can reprice expectations fast, so those are must-listen events.
Also keep an eye on corporate catalysts, earnings, guidance updates, and any new M&A chatter. Sector flows will tell you whether today was a genuine rotation or just a pause before money piles back into growth.
And from a risk perspective, monitor volatility measures. A falling VIX alongside broader participation would support the constructive view. Any sudden spike in implied volatility would be a red flag for a short-term reversal. Final takeaways. Markets closed up in a meaningful way, with tech leadership and small-cap participation, driven by company-specific news and steady Fed expectations. Analysts note the environment favored equities on positive corporate data, so long as inflation and labor prints don't surprise on the upside.
Remember, this is market commentary, not personalized advice. We're presenting analysis and data for informational purposes only. Analysts' notes reflect observations, not recommendations.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next time.